In today's video, I'm going to teach you how to do options on Moomoo. We'll keep it beginner-friendly and walk through everything from getting approved to placing your first order. Options are powerful tools, but they do carry risk, so follow along carefully and take your time. First, make sure your account is enabled for options trading. Moomoo requires approval before you can place options orders. If you don't see an options tab in your app or desktop platform, request permission in the app or reach out to customer support. The platform assigns options levels based on your trading experience, financial profile, and account assets, so answer those questionnaires accurately. Approval can take a bit of time, and some strategies may remain restricted depending on your level. Once you're enabled, open the Moomoo app or desktop program and search for the stock or ETF you want to trade. For example, you could type a popular ticker and open its profile page. Look for the Options section, then select Chain. This is where you'll see a grid of available contracts. Calls are typically listed on the left, puts on the right, with strike prices running down the middle and different expiration dates you can switch between. Think of calls as contracts that benefit if the stock goes up, and puts as contracts that benefit if the stock goes down. Next, choose your contract. Start by picking an expiration date, the day the option expires. Shorter expirations move faster, but are more sensitive to price changes, while longer expirations give you more time at a higher cost. Then choose a strike price, which is the price at which you'd have the right to buy or sell the underlying stock. In-the-money strikes have intrinsic value, but cost more. Out-of-the-money strikes are cheaper, but need the stock to move further. Tap or click the specific contract you want. On mobile, a trade menu will pop up so you can set buy or sell and your quantity. Now place the trade. Choose whether you're buying or selling, enter the number of contracts. Remember, one contract typically represents 100 shares of the underlying, and pick your order type. Market orders aim for immediate execution at current prices, while limit orders let you set the maximum you'll pay or the minimum you'll accept. Review all details carefully, then confirm and submit your order. Finally, here are the basic trades you can do. Buy calls if you're bullish, buy puts if you're bearish, and sell calls or puts for potential income, though selling options is more advanced and may require collateral or margin approval. That's it. Take it slow, double-check your selections, and practice good risk management as you get comfortable with Moomoo's options tools.